What about importing or exporting goods into or out of China? Are there any particular issues that that would distinguish China from any other country?
Well, I guess doing import-export business is basically the same, like it's very similar. For instance, if you're going to export New Zealand milk products into China, I would say you will need to find a trustworthy distributor with a lot of sales outlets that you can reach to the customers, or you can consider set up a joint venture with a local domestic partner so that they can help you sell the goods. For importing, for example, you want to import China-made chopsticks into New Zealand, and you may need to find like a trustworthy local Chinese supplier, or actually you can set up a procurement entity in China as well. But I would say doing import and export business in China, because it will expose you to the corporate income tax, value-added tax, custom liabilities, and also the transfer pricing documentation requirement. And I think it will be good to know, to get a full understanding of all this implication before you actually execute your business, because that will have a huge impact, and it may actually increase your risk of doing your import-export business in China.
So we seem to be going back to that whole issue around making sure you know who you're doing business with as a key prerequisite. Don't get into business with someone that you don't know or you don't trust. Now, Christine, you mentioned transfer pricing. That is one of the hot issues in global tax at the moment.
Correct.
How's China doing on the transfer pricing front?
Transfer pricing in China is very exciting right now because we are rapidly developing on this aspect, and we are actually becoming more sophisticated on a day-to-day basis. Although we are still not an OECD member, but our transfer pricing broadly follow the OECD guidelines. So basically, if your related party transaction is conducted as an arm's length principle, you're safe and you're good. But if they consider you're not, then they are empowered to make transfer pricing adjustment, and you're going to pay tax on that adjustment. So that's basically a broad idea. So we would say, as practitioner, we have seen a lot of recent increasing number of cases where our clients are getting transfer pricing adjustments and like queries about their transfer pricing policy, and because they're trying to boost their tax revenue. So I think it's important for them to look at it more closely for business before they actually start business in China. And also the compliance requirement is quite stringent too. Like we have annual transfer pricing reporting. So you have to report all your transfer pricing transactions with related parties annually on your income tax return. And if any related party transactions is the size or the value is overshoots some prescribed threshold, and then you will need to prepare a more detailed and extensive transfer pricing documentation at the time of your transaction to be submitted to the Chinese tax government. And I think it's worthwhile to know.
Well, that's been a great insight into issues that we must be aware of when we're doing business in China, Christine, and thank you very much.
Thank you, Tony.
One final question I would have. If I was looking at going to China to do business, where could I go to find some key statistics that I might find of use?
I would say you go to the National Bureau of Statistics of Chinese government, they offer a range of trade statistics collected by the Chinese government. And at the website is www.stats.gov.cn.
Okay. Thank you, Christine. And
Thank you, Tony.
Enjoy your trip back to Hong Kong.
I will.